Is Solana set to grow by 400% in the next few months? That's what we're going to look at today. Some of the fundamentals, but definitely the technicals on the price action and the psychology of the market. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading crypto for 4 years now, but currencies for over 8 years. No, 8 years, 15 years. Back in 2008, I was featured in his best-selling book, High Probability Trading Strategies. Phenomenal book, great information. So let's dive straight in. So we're going to start with coin market cap with Solana. You know, today's price is around $40. The market cap is $11.5 billion. All-time high price, if we just go down here, of Solana has been, let's have a look, it's been as high as 58.30. But let's just give ourselves a quick reminder. So what is Solana? So it's like an Ethereum competitor. So build crypto apps that scale. Solana is a fast, secure, and censorship-resistant blockchain, providing the open infrastructure required for global adoption. So it's like an Ethereum, but the selling points is, if we just scroll to the bottom, there's got a great video here, by the way, if you want to have a quick update on what Solana is, what they're doing. And they say it nicely here. Scalable, low cost, and composable. The main thing is scalable and low cost. They said, look, we don't need layer 2 solutions because we've built it in the foundation blockchain. So Solana is a powerhouse, up and coming, and we believe it's going to make some real good traction over the coming weeks and months. But what we want to look at today is the price action. What is the price likely to do? So the last video we did on Solana was actually on June 14th. So it's overdue. I'm overdue an update of Solana. And what we said on June 14th was the market moved down. It did a bit of a correction up. And I said it's likely to do a third wave down. Why? Well, if I just bring you back to Elliot wave principles, right? Elliot wave principles. By the way, I got my cat behind me. So if you're hearing a bell noise, it's my cat. It's early in the morning and sometimes she sits behind me. So Elliot wave principles is market tends to move in a 5-way sequence, 1, 2, 3, 4, 5, followed by an A, B, C correction. Corrections can be more than 3 waves, but more often than not, it's a minimum of 3 waves. So based on that information, we can look at Solana, and I said, look, the market looked like it did a 1, 2, 3, 4, 5 on the way up, and then we are due for a correction. We've done the first wave, the second wave, and we should anticipate a third wave. Now, sometimes it pans out perfectly, and you'll see that the market just responded perfectly because we did the video around here on this date, which was June, around this area. And you can see this part of the market unfolded just textbook style. This is important to note because we did this ahead of time, right? We did this video ahead of time. We said there's Fibonacci price clusters, Fibonacci price action. There's pattern A, B, C of a wave B, and we should expect a wave C. Again, here's the theory. Boom, 1, 2, 3, 4, 5. There's waves within the waves, but the main principle is 1, 2, 3, 4, 5, and an A, B, C. That's the simple theory of Elliott waves, and you'll see it unfold around 50% of the times quite clearly. So this one unfolded quite nicely. And let me just quickly do an update because I've taken the data back a couple of weeks, and then we're going to go right up into today's data. And why? Why do I believe that Solana is likely to do a 400% from today's price over the coming weeks and months ahead of us? Not only that, it's a powerhouse project, but psychology of the markets, buying behavior we want to look at. So let's just do a quick reminder on how we projected this wave 2. We just did a simple retracement of this wave 1. Typical corrections tend to be 50%. This is a quick reminder, 62%, and then 78.6 is the maximum. And you can see it's right in this zone. And then I would normally, again, we did this ahead of time. I'm just kind of doing a quick recap. We'll measure this wave A. We'll project it forward from this wave C. And the typical wave C, more often than not, is actually 100% of wave A. But minimum tends to be 62%. Look at that, tagged it perfectly, right? And we would have had this information ahead of time. Remember, we did this ahead of time. I think if I zoom forward, I would have done some more projections, and I think in the video, I had some price data and some price points, etc. So what was those price points? Well, some of them were, the other one would have been the external retracement. I'm just doing this very quickly, more just so you kind of see a bit of the method behind the madness. It's not just random pieces of data. This tends to be the minimum. And there's a few others. There's one other thing that I would normally do, which is, I'm just going to show you this because I think it's relevant. But then we're going to look at today's price action. We'll take it up to today's data. Let's just quickly do this pattern here. It looks like a wave 1, 2, 3, 4, 5 of a C. That's a very deep wave 4, by the way. And we want to go micro. We can leave that out like this. Right. The reason I'm drawing that in is because I would also at the time do something called a wave 5 price extension, where you measure wave 1 to 3, project it forward from wave 4, and the typical maximum is 100%. You can see it's right in that zone, right? It's right in that zone, right in that zone. Boom. A few other factors as well. One of them which would have been, I'm doing this very fast. You know, a wave 1, a wave 2 normally corrects close to 50% time retracement. Absolute minimum tends to be 38.2%. So you can see we're right in that time zone as well. So what we would have projected ahead of time is something along the lines of this, especially as the market unfolds. So we should anticipate a correction here. And then when you have the momentum down here, also where the blue line crosses the red line, so you got pattern, price, time, and momentum telling you the same thing, the likelihood of it happening is very, very high. And then let's just take it to today's data. So this is from July 20th. And what's happened in the last month or so, or 3 or 4 weeks, is this is what's happened with Solana's price. And now we've had this big move to the upside. So this is the first indication that we've had a nice trend reversal. Nice trend reversal. It's the biggest move, especially in comparison to this move. And even to a certain degree, this move. Let's just have a quick look. Has it exceeded this move to the upside? And it has, not by much, but just tagging that area, right? But we can see that there's a big reversal. So now we've got quite a bit of information that tells us, is you know, textbook stuff here. If you just look at this, let me just make sure you're seeing this the way I'm seeing it. Is we've got this, so what I'm seeing is a wave 1, and then we're seeing a wave A, because the theory is obviously much cleaner, and then in real life it doesn't unfold as clean, but this is what I'm trying to get across to you, right? We've got this wave 1, and then an A, B, C of a wave 2. When I look at the theory, if we actually just now scale down to this section on the bottom left, where we say wave 1, and then an A, B, C of a wave 2 on a lesser degree, what do we anticipate next? Well, it's this part of the market, this wave 3. And if you see this wave 3, you'll see that I show that it breaks down typically into 5 waves, 1, 2, 3, 4, 5. So what that looks like, again, is going to be 1, 2, 3, 4, 5 on a macro, really big picture. But we've looked to say, we're saying basically we've done this part of the market. 1, 2, 3, 4, 5. And then this textbook A, B, C, it's called the ABC zigzag, represents psychology of the market, is pulled back to 50% to 62%, which is a typical time zone, price zone. And now, have we seen the beginning of this new wave 3? Now we can do a really accurate price projection ahead of time, like we did before, that what is the typical price, minimum, maximum of a wave 3 if it unfolds? Well, that's what we're going to look at next. So picture this, 1, 2, and now we're just going to pull this up. Look at this, 1 ABC of a 2. Yeah, hopefully that makes sense. So now we are focused on the wave 3. The wave 3. I think I've drawn this already, but I'm going to draw them again. Let me just delete these because I'm going to show you how I get these numbers. So this is quite cool, but now we can just delete all of this stuff because it's no longer relevant. That was relevant in the past. I just wanted to keep you up to date on how we got to that. Again, we're still going to keep the question mark here because we need to see a close above, like really above here, to really have the absolute confirmation that we can sign off as a wave 2. So what is a wave 3 typical? Let's just get really clean here. Let's just get the Fibonacci Price tool. Where am I looking? Here we go. This one here. We want the trend-based Fib extension tool on TradingView. We're going to take this low down here at the beginning of this wave 1. We're going to measure up to the top of the wave 1. And we're going to project it forward from this wave 2 low, what we believe to be a wave 2 low. Now, just a quick caveat. Is it possible that can happen? Yes. You need to be aware of that. That's why people have proper risk management. And we're probably going to see some type of correction, but that is possible. Anything can happen, but the probability states that we should see more movement to the upside. Now, when we're doing a Fibonacci price extension for a wave 3, there's two key numbers you want to be aware of. 1.618 is the most common wave 3 price of wave 1. So we measure wave 1, and I'm going to show you what I mean by that. And then typical maximum is 2.618. So what we've just done is we've just measured wave 1. So we just said, hey, look, how much has wave 1 moved forward? We're projecting it forward from wave 2, and then we're adding 61.8% to it, which makes it 1.618. That's this line here. And then just beside it, we said the typical maximum of a wave 3 is a 2.618. So we're taking that wave 1, and then we're adding 1.618 to give us a 2.618, right? These are the two typical price zones. Hopefully that makes sense to you. Oh, let's just zoom in like this because it's off the charts. Zoom in like this. So what I'm saying to you, probability-wise, Solana has a good chance. Now we know the fundamentals of it. It's a powerhouse blockchain, right? And it's faster, it's cheaper. It's 1 cent per transaction, whereas Ethereum currently is at $20, $5, $50. The highest gas fee I've personally paid is like $290. Jeez, yeah. Binance Smart Chain is a lot cheaper, but Solana seems to be even cheaper again and even faster. So let's have a look at the price. 2.618 is $168 or thereabouts. Let's just call it even $160. Today's price is $40. Pull up a calculator. We go, okay, the typical maximum of a wave 3 is around the $160 range, just above. Today's price is the $40 range. That's I told you 400%. Is it likely to occur? The probability states yes. Is it guaranteed? No. How long is it going to take? Let's have a look. Typically a wave 3, the time taken is very similar to a wave 1. So we can get a bit of a perspective. How long did this wave 1 take to form? And we can project that forward from wave 2. And the number we want is 100%. Now it doesn't mean it can't happen faster, but most common is the same amount of time. So we're talking about November. So where are we now? August. So a couple of months, right? And what's the typical maximum? Typical maximum is a wave 1 to 2. How long that takes? 2 clicks there. Well, now we've got a nice price and time zone. We can also do an external retracement to narrow these down. An external retracement is like a more of a confirming indicator. For a wave 3, the two numbers we want are 1.618 and 2.618 external retracements. And you can see this one's nowhere near it, and it's these two zones here. So this one is we can delete this one, 1.618, and we can also get rid of this number for now. So we can say we've got two kind of zones. This is going to be more likely, and we've also got the time. So we can say, hey, it's likely that Solana will hit his wave 3 high here, which here is 112, which is more of a 3x. But if it overextends, the next price zone it will hit is closer towards 160. So that's what we can anticipate. It will tend to happen in those waves, 1, 2, 3, 4, 5. And as those waves unfold, we can do more detailed, precise analysis to see where is it likely, like we did down here. Because when you get pattern on a few degrees, and when I say a few degrees, I really mean you got this wave 1, but then you got a 1, 2, 3, 4, 5. There's 2 degrees of wave counts. When you see that, we can use Fibonacci on both of those degrees, and that will give us more information to say, hey, when is it likely to end its move? So there you have it. Solana likely to do a 4x, probably a minimum of a 3x, but be cautious because anything in the market can happen. So you always want to apply proper risk management. If you like today's video, like, subscribe, hit the bell notification. Let's finish on a quote. Still on this book. Just going through this book. I'm just finding chapters. I actually studied this book. It's a fascinating book. Napoleon Hill, Think and Grow Rich. So this is on chapter 7. So we say riches do not respond to wishes. They respond only to definite plans backed by definite desires through constant persistence. Every failure brings with it the seed of an equivalent success. So failure is one of the secrets to success because every failure brings with it the seed of an equivalent success. All right, have a great day and I will see you very soon.